you're a late crypto short, then you probably want to watch the show. If you're looking for lower prices, there is a possibility that you're going to get squeezed out of the market first before anything. And that's why we're starting off with this intense music, because today is an intense day. It is CPI inflation day, and it's going to be volatile. There's a whole lot happening in the markets. So let's go through the topics of discussion very, very quickly over here. Starting off with the crypto bubbles chart, you can see a lot of the altcoins are already starting to pop on the daily. And it's not looking too bad, at least from the altcoin perspective, at least from this bounce that we're looking at the moment. But it could still lead to one more sweep lower. I'm going to show you the scenario where it could be an up and then back down. And then you can make your decision from there if you're looking to get into the market or not. So here you have it. The CPI inflation data is going to be coming out today. And overall, inflation peaked all the way back in July of last year. And it's just been trending down ever since. So we want to see that trend continue. The expectation is that it's going to come in at around 5%. Now, anything, of course, above 5% would probably be quite bad for the markets, because that means that the market is obviously going to price in that the Fed's going to raise interest rates drastically at the next meeting, which is coming up is sometime in June. And consequently, you're going to be looking at lower prices. If it comes into expectation, I expect that we'll continue through this transitory market where we're transitioning from what was a strong bear market into potentially a consolidation, and then maybe at a later stage a bull market, which means price wise you'd be looking at more sideways and slowly grinding up. So let's have a look at Bitcoin over here on the weekly chart. We've covered this a whole lot. The only difference over here now is I've put in a diagonal trend line. Diagonal trend line matches up with the 255 moving average on the weekly, and that's really your buy the dip zone. Start to lose that level, and of course much lower prices could come into play. So let's wait to see if price action can even get into that $26,200 pocket. That would be a beautiful level for a wick to come into the zone, and then for demand to quickly come back in and bulls to buy price back up, leaving just a wick behind in exactly the same way as what we saw over here. So pay attention. That could be something that could be on the cards on a volatile day like today. We got the S&P 500 futures chart still in the expanding megaphone pattern over here. Not much more to comment on. Sitting below the gray box territory, which is a conglomerate of very, very serious resistance. And you can see price just oscillating within this region. We're right in the middle. Can't comment on this too much. Really nothing to say. We need to wait for extremities. As traders, we like to make our trades on those extremes, and therefore you need to wait for 4,231 or all the way back down to 40.50. That is for the S&P 500 futures. You got the dollar, so the DXY, still sitting right at that major support where it's been consolidating for a number of weeks. So ever since the 13th of April, it's about an entire month that we've spent around this region. And also there will be a decision that will be made on the dollar. Most likely after today, we'll start to see it either expand towards the upside or continue to grind down. I think that probabilistically, it's more likely that at the very least, you do get a test of this T1 area. T1 is target 1, T2 and T3. At the very, very least, a little bit of a bounce before maybe setting in a low high. If it gets above that, then of course we start to target all the way up towards T2. So currently the DXY is situated at 101.57. T1 is coming in at 103.4. The VIX, the volatility index for the S&P 500, still contracting right into that key area. Also expecting that possibly we could see some sort of a move or resolution off of this region around the 1650 level, where you might see an expansion towards the upside. Remember, in extremely volatile environments, this is for a future note that you can put on your trading view on your VIX chart. Mark off the 30 line. That's the risk line. Anytime that the VIX starts to expand above that level, you start to see really, really big moves taking place. And then your biggest moves happen around here, 48.50 to 77. That's where you expect your major capitulations and market bottoms to take place if the VIX ever does get up here. That's just a side note for you. All right, also wanted to give a shout out to Prime XBT, one of our sponsors. I'm going to do a giveaway today. So if you don't yet have an account with them, make sure that you go through to the link in the description below. Click that link of mine over there. Sign up to Prime XBT. You can use the promo code Kyledoops. But based on today's show, I'm going to give away 3 vouchers over here. So if you want to trade stocks, forex, commodities, or crypto, Prime XBT does offer all of that I believe there's no KYC there, which is great if you are somebody that's trying to veer away from that. Now, the way that it works is very much a first come, first serve. Each one of these codes is a promo code whereby you can get $50. You would need to deposit $200 into the account first, and then they're going to match you with $50, but you need to type in this promo code. Where do you type it in? So that's promo code 1, 2, and promo code 3. All you need to do is go through to this section under if you're depositing USDT, then make sure you're on USDT. The other option is Bitcoin. Let's assume you're depositing Tether. Go through, copy and paste. I'm not going to do it. I'm not going to steal the code, but this is what you need to do. Take that code, copy and paste that code in here like that, and click activate. When you click activate, it will give you the $50. Great, let's move on to the total market cap. Today's show is going to be pretty quick because not much has changed based off of yesterday. Very, very minor things on the small time frame. I thought yesterday I gave an extremely thorough analysis of my exact thoughts and what I'm looking at in the market. So let's make today's show a rapid fire one. Still same level for total 3, expecting a possibility of coming just below that $1 trillion mark. Let's see total 2 very quickly. Total 2 is almost touching the trend line. Possibly today we'll get that touch. I've moved this price bubble up, meaning you're looking at 555 billion on total 2 as a support level. Now, Total 3 is already coming into its support at the mid-range at 347. Let's see if there's any sort of reaction around this region. If it fails that level, it could get really, really ugly. Then you're going all the way down to that 301 billion for Total 3. Now you can see the rising wedge formation on Bitcoin. This is on the daily chart. Let me give you a bit more perspective over here. So this is a bearish formation pattern. It's not really my base case or something that I'm looking at, but it's something that's going viral on Twitter at the moment. So according to this, the wedge would already be breaking down, and your target levels off of this wedge would be your first level of interest is at $25,450. Your second target would be all the way down to 20,900-ish levels. So right about where this wick low was set at 19.7. Now, the only commentary that I have on this at the moment is I'd wait for further confirmation of a greater breakdown before starting to look at something like this. I do agree with first target, but I don't see it as a falling wedge pattern that's going to fall, that's going to complete its move all the way down to the bottom over there. I think if anything, more than likely, I would treat it like this. If you do see a move that comes into there, I think that would be a tremendous opportunity to get long, because overall, let me just draw it out for you. You would have this as your lows, your higher low, and ultimately I would see that as your next higher low. I don't believe that price will get all the way down to this level, but of course I will manage my risk accordingly when we start to approach those levels and reevaluate. We need to reevaluate and see if we even get into this level, what's happening on the lower time frames once we get there. If it's showing signs that it could break down further, of course I won't go long. I will remove any risk that I have in the market, and then I might start to target those low prices, which ultimately means you'd be looking still at price breaking back into that previous range, right? So remember, this was the previous range, and then this starts to look like a big deviation that becomes an incredibly bearish scenario. So that's my commentary on the falling wedge, or the rising wedge, which has currently been making the rounds on Twitter. Okay, let's have a look over here at the Pi Cycle top and bottom indicator. Remember, the Pi Cycle top indicator essentially uses a conglomerate of different exponential moving averages and moving averages and timing factors as well. And consequently, it's done pretty well in the past in getting pretty close to the bottom, at least timing wise. It doesn't always nail the bottom as per the price action bottom, but it comes very, very close within a couple of days or weeks of the actual bottom. Now, here was your timing. This is where the Pi Cycle bottom called the bottom on this candle over here, which happened on the 20th of June 2022. The week before that, price went a little bit lower. We went down to 17,600, consequently bounced. Pi Cycle bottom said the bottom is in. But then what happened? Obviously, price went a lot lower. This was due to the FTX saga. Here you have the FTX saga. Then you can see that price started to reclaim these moving averages. Now, the reason I'm bringing this up now is because you'll see in the mega trending moves, what happens is price comes back into that moving average, and it usually uses that as support. Now, that level, that's the 111 moving average, and it's currently coming in around that $25,800 level. So if I go back in history, You can see the way over here in the previous bull runs. Look at the green moving average. Every time it really bounces off of that and uses that as a major level of support going into the next bull runs. Here you can see it from the massive 2015 cycle, which we look very similar to, right? Very, very similar. Called the bottom over here. Price went a little bit lower over there, bounce, and then you made a secondary low similar to what we've done over here, but our secondary low was lower than that one on the left hand side in this current cycle. Price then moved up, recaptured the moving averages. They started to turn back up, and then it held that level as support all the way throughout until you got to the very, very top of the next cycle. So very, very interesting. Nevertheless, we'll watch it closely, and I think that could provide an opportunity with a bounce off of that 25k level. Lose that, and things start to change, and then you have to say, well, this time is different, and maybe things are really, really changing in the markets. Next, we have the Ichimoku cloud over here. You can see a possibility of a cloud retest as well. So if you pull price action all the way down, this would be coming in around that $24,000 to $25,000 level. So depending on how long it takes to move into the cloud, let's follow a trajectory like that, you'd be looking at a move at about $25,000. Again, that opens the opportunity to go long, and your stop would obviously be below the cloud over there. This is more for the investor, the people that are trading spot. You would use something like the Ichimoku cloud. I don't necessarily recommend it for leverage trading because your invalidation levels are too far. Okay, very quickly touching on Bitcoin again over here, your pivot levels. I'll show you the Ethereum pivot level as well. Your pivot level as of today has moved up, which means that in order for the RSI to start to cross back towards the upside and for price action to follow suit, price action would need to reclaim above 28,306. I'll say it again, 28,306. That is your pivot level. I've drawn the horizontal line over there, and that's also the top side of the channel, which would create an interesting scenario, right? So not only that, but you also have now, in line with that pivot level, your EMAs, which are currently crossing towards the downside, and that's going to add additional resistance, which means if you do see a short squeeze that comes into this level over here, it's probably going to be an opportunity to reload on those shorts. These guys that are shorting over here might be a bit late to the party. There's a good chance, and I'll show you using the cumulative volume deltas and things like that, why there's a possibility they're going to get squeezed up. So point being, if you see price action squeeze into this $28,300 level, that's an opportunity to add to your short position, and then you can reload it back down to the other side. And it's interesting the way that the markets work, right? You get as the late shorts capitulate, then usually price goes in the direction that they were initially intending for it to go, but at that point they've already bought back into the market. Now looking at Ethereum, you got the same thing. You got the 9 and the 21 exponential moving average, which is the yellow and the pink, matching up again with that pivot level. Your pivot level on Ethereum is $1,877. Again, $1,877. Ethereum needs to reclaim and get back above that level as well as above the EMAs, which are crossing down, and then momentum can potentially start to shift back towards the upside. So for the time being, momentum on the medium time frame is towards the downside, meaning over the next couple of days to weeks, pressure is still down. I hope that summarizes and makes it pretty clear. Now, your head and shoulders pattern over here, this is what I was saying. If you correlate this to, let's pull this across over here. So if you correlate the head and shoulders pattern in line with this over here, you'd be looking for your confirmation of the breakdown. Only once price starts to break below about that 26,900-ish level, once you start to get closing candles below the neckline and below this horizontal box over here, then you have the opportunity where that might play out to the downside, and the measured move off of that is going down to that 23,000, which then starts to look similar to this region over here, where it's possible that that wedge could play out all the way back down. Also, remember that these patterns can fail, and they fail often. They fail quite a lot, more than what you'd realize. And the failed patterns, oftentimes, when they fail, the move goes in the opposite direction according to what the intended pattern is meant to be in a very, very strong fashion. So what would that look like? Well, that would mean that price, if it does fail and you get back above your right shoulder and you accelerate towards the upside, you're probably going to take this liquidity over here at the $32,000 to $33,000 level. This was my longer term intended plan, where I was looking for Bitcoin to eventually move up into that region, for the relief rally to finally fail. So some sort of a deviation into that region and then back down into the main range. So that's a possibility as well. Keep that in mind. That is your failed level. If the head and shoulders pattern goes the other way, you're looking at around that $33,000 zone. Now, I wanted to help you guys out with a very quick and easy strategy, which you could use on a volatile day like today. And the strategy is this. Now, all you need to do is, let's go into, because I have a lot of drawings on this chart, let's go to an altcoin chart, for example. Let's go to Atom. Okay. This is already starting to play out on Atom. Now, what you want to do is you want to mark out Monday's high and Monday's low. You want to correlate this with Bitcoin and make sure that Bitcoin is breaking back into its range, because remember, Bitcoin will ultimately drive all markets. So let's assume that Bitcoin moves back into its range. So you're looking for a sweep of the low. You can see Monday low is marked off over here. Monday high is marked off over here. You take from the wick at the top to the wick at the bottom. Now, when price sweeps and comes back into that range, that's an opportunity to go long with your stop loss below, and then you target all the way back to the top of the range high. So make sure that Bitcoin does that first before you decide to implement the strategy on a particular altcoin. So let's use Atom as an example. I was on Atom. Let's go back to Atom. Here you go. Here's Atom. So you can see Atom is already starting to take out its Monday low. Now, if Bitcoin does start to bounce from this region, and I have reason to believe that it could based on what the funding rates are showing from the short side, then it's a possibility that once Bitcoin does that and it reclaims, you'll see the altcoins follow suit, and therefore you want to place your stop below the ultimate low, which would have recently been set. As price comes back into the range that's above the Monday low, that's your trigger to go long, and then you can trigger towards mid-range for some of your to take some of your trades up to there, and then you can close the rest out at the Monday high. And they all look the same, right? I'm going to show you one very quick easy step, because probably some of you are wondering, now you have to sit with all that admin and go mark out all these levels. All you need to do is go through to this indicator over here. It's called Spaceman BTC Key Levels. Type that in on TradingView. I'll show you again. This one over here, Spaceman BTC. Here we go, key levels. Click that one over there. It's got 5,666 people. It will mark this out. You can actually adjust this as well. You can mark off a whole bunch of things, your 4-hour high, low, daily high, low. You can put a shorthand. So do you want it to read the longs? Do you want it to read the whole writing over there, Monday high? Or do you just want the abbreviated form, monthly, yearly? It's got everything for you over there. So that's a quick and easy tip, some free alpha. Please hit the like button. Alpha doesn't come every day, so hit the like button. Sometimes the markets are boring. Also, let me know if you are present before we continue over here. I see we got Puni, we got Bella, Sasson, JB, we got Shum, we got Banter Girl. I have Crypto Banter as well commenting over there. 500 likes incoming. Please smash the like button. It helps to get the video out there. Alex Wells, welcome. Gianluca, we got Nick Gordon. Thank you guys. Thank you so much for always joining. I do appreciate each and every single one of you. Okay, so pick your favorite altcoin. It doesn't matter which one it is. Same thing. Look at them. A lot of them are breaking below their Monday low. And this is a quick day trading opportunity, right? This is not something that you want to hold for a long period of time. It's very, very quick, very simple. You're looking for a break back into the Monday low and long to the top side. Okay, Bitcoin over here. Now you have the inevitable, which has already officially taken place as of right now, and that is the cross, right? Remember, I told you on the 4-hour chart, the 50 EMA crosses below the 200 EMA, and that starts to show warning signs for me personally as a trend trader. That means that it's more likely you need to start to treat things as a range again, as opposed to having the possibility of trending. Now, the thing is, once the cross happens like it has over here, you can expect that to draw price to draw back into that region like a magnet. Think of it like a black hole that wants to suck everything in, or a magnet. As soon as that happens, then you have a reversion back to the mean, this being the mean. Therefore, pay attention for the short squeeze. Price could shoot back into this region over here. And again, would you look at where that lines up in relation to what I showed you on the daily pivot level, as well as the daily EMAs, which are crossing to the downside? It comes in at exactly the same price point, which is $28,300. $28,300, very, very key level for Bitcoin to overcome. If it gets back above that, then you could say, well, is it possible that all of this was just a massive shakeout and fake out towards the downside? Absolutely, that's a possibility. So be open to all scenarios when you are taking your trades. And Ethereum will look exactly the same. Let's see, Ethereum should also be crossing down. There you go. You're starting to get the death cross, right? 50 is crossing below the 200. 55 would be lagging if you're using the 55 and 200. Also a great pair of indicators over there. Then that one would still be yet to cross, which is coming soon. Okay, next over here, what do I have? Very low time frame on the 15-minute chart. Remember, I was looking for a proper sweep of this low, and I'm still looking for that. The question is, do we first get a push back up towards that $28,100, $3,000 level, squeezing out the late shorts, and then after that have follow through? So something like this. Let's zoom in to show you the exact picture of what I'm looking at. There is a possibility that you see something like this. Price moves straight back up from here, where we are now. Big squeeze to the upside, meets up with the top side of this channel over here, rejection from that level, and then a sharp sell off right through, reclaim, and then you have the opportunity to go long. So I'm open to the idea that something like that could possibly happen. At the end of the day, this is still a bearish formation pattern, right? So what do you have over here? You have a bear flag, right? A simple bear flag. You have your pole. This is your pole. Here's your flag forming. So it's an in spirit of one, right? Remember, I told you call this an in spirit of bear flag if it's not perfectly at a 90-degree angle. And that means that you can work that out as a measured move. Let's clone it. I mean, this one's probably going to be quite brutal. Let's clone this level over here. That would take it all the way down to $25,000 if that measured move does play out and it breaks down from this exact level. So this is not my opinion. I'm just showing you the facts on the chart over there. There it is. It's in plain sight for all of you to see. At the end of the day, I'm more interested in the range and the liquidity. And that range and liquidity is this. 27,230 is the bottom side of the range and the liquidity. Top side at 30,000. Ethereum looks pretty much exactly the same, right? So here you got Ethereum. Ethereum, you can see, has not been forming the bear flag. It's just been consolidating sideways and slowly grinding down. It doesn't look the same as Bitcoin, where Bitcoin is pushing up like that. So keep your eye out on that. It is a possibility that you could have a long trade from here if you see demand kicking back in on a very, very low time frame. That could be your next high low. Big push up, and you'll see why I'm showing you on the next chart the possibility to squeeze those shorts out, and then from there we go all the way back down. Let me know in the comments, does that make sense? Does that help? I see Alfie's mind is blown. Alfie and Teddy. Banter girl, ahoy. Okay, cool. You guys understand that. Let's move on. Looking at the rates over here, if you look at the funding rates as well as the open interest and then the cumulative volume deltas for both spot and leverage traders. Leverage traders are trying to push price down. Spot traders have not yet completely sold off. Well, they have, but not as aggressively as what they could. This is denoted by this over here. This chart over here. So you can see mostly it had been trending up and now it started to move sideways and slowly move down. So if the spot traders continue to buy price up, you can expect that there's a high chance that the leverage traders are going to get liquidated out of their positions and be forced to close them. Derivatives markets, which is the leverage traders, it does drive market movement, but not as much as what you would see from spot traders, right? So what you really want to see is what the spot traders are doing. If you look here from Skew, he says though that the spot cumulative volume delta buckets and delta orders are still very much the same. There's a daily VWAP which illustrates when market makers are TWAP selling into price via small spot orders, market maker spot orders, and TWAP CVD Okay, a lot of words over there. Basically, what he's saying is that market makers are using the TWAP and VWAP, which is just a particular type of volume-weighted moving average that you can put onto the chart. And every time that they can push price into that level of volume, they're offloading bit by bit in batches. But eventually, they will stop doing that. And when they do, then there will be no more demand, or no more, at least there will be no more of the pushing the price to the downside. The leverage traders will therefore be liquidated out of their positions. And he shows it over here as well. He's the 𝗕𝗬𝗕𝗬𝗪 skew is the best for looking at these cumulative volume deltas and analyzing what's going on with the flows in the market. I think his stuff is very accurate. He says signs are showing that the perp market, which is the leverage traders, is overly saturated with shorts, CPI coming later as well, so increased odds of volatility. And if you have a look over here, you can see on the chart, so you got essentially the funding rate gone completely negative over there, and then you also have the volume, which is starting to pick up on this side, and you're looking for that range trade, right? So looking at the liquidity as per the heat map, remember that most of the liquidity has been captured, but there is still a little bit more towards the downside, which is why it opens up the case for that to be grabbed. Now you see heavy short selling marked by the red levels over here. So this is your funding rates and the potential liquidation levels for the shorts, and we're looking for price to push into that zone. Also, if you look at the liquidations over the past month, we've had no real short liquidations, right? Because people have been max long, and now they're only starting to flip into the short side. So this is marked, the green candles are all the longs that got blown out of the market. We've had that a few times. Now guys are starting to flip short again, and ultimately you'll be looking for another one of these big red candles to the downside, showing that the shorts got blown out. Okay, I think that really pretty much just about covers it. Please make sure you smash the like button, hit the bell notification, and subscribe to the channel. And then also remember, we do still have a couple of competitions going on, one of which is also OKX, right? We also have the OKX one. Let's click on that. We're still giving away a Tesla, which is pretty big deal. Make sure that you check this out. Click on that link over there. Make sure you've signed up using my link. Each trade that you take is an entry, and we have 12 days left to go. So by the 22nd of May, we're giving away a Tesla Model 3 or $50,000 if you don't want the car. If you're too late on that competition, there's another opportunity which is going to be coming up, of course, with the ByBit Trading Competition. Sign up using my ByBit link below. It does help me. It supports me. You get $30,000 in sign-up bonus, and then click the competition link. It will take you through to the page. And we have the same thing, right? Big prizes. Tesla, you get a Tesla, my head's in the way there, Tesla or $40,000. You get a Rolex for $20,000 in second place prize, and then you get $10,000. We have 300 spots left that are still available. We're taking up to 2,000 participants in that competition. And guys, that's it from me. Let's see what the volatility brings today. We'll have a lot more direction coming into tomorrow's stream. I will see you all on tomorrow's show. Have a fantastic day, and cheers for now.